Well, hello and welcome to another video by Financial Learning. On today's video, we're going to talk about American Bitcoin Corporation and their reverse merger into the NASDAQ. That's right, we're going to talk about things such as the merger, the miners, the megawatts, and their overall mission. So without further ado, let's get right into it. All right, this video will be broken into four main sections, and then I'll give you some risks, some catalysts, and some final thoughts on my end. But looking at the first key highlight here is going to be their power infrastructure. They are utilizing some of Hut 8's data centers. We'll go into the details of those exact sites as we continue on. But the next is going to be hardware. They're ASIC miners. They have a total of 76,000 of these ASIC miners, and it is a mix of various brands and models, but they did provide us an overall hash rate, and it is 24.2 exahash. And they have a very robust efficiency at 16.4 joules per terahash. Moving on to the next section we're going to talk about is going to be the ownership. We're going to break down the percent ownership between American Bitcoin and the Gryphon Mining investors. And then we're also going to look at a pro forma review of both the income statement and the balance sheet. And then lastly, I want to talk about funding. How will they continue scaling operations? How will they pay for operations without selling Bitcoin? We'll cover all of that. It is an open ATM. We'll go through some of the risks, some of the benefits of that as well as we continue on. All right, and jumping into the infrastructure and scaling, they are utilizing Hut 8's flagship data centers, specifically Alpha Data Center, that is in Niagara Falls, New York. Now, what's unique about this data center is it is using hydroelectricity in order to power, so that is a pretty cheap cost to run that specific center. Now, the other thing is it is a hydro cooling friendly site. So some of these more efficient miners, we'll talk about them on the next slide, can be used at this specific data center. So that's a good benefit here. Now, the next of which is going to be Salt Creek. That is in Orla, Texas. Now, that is a low cost power hub. So it is near some oil and gas load balancing sites. So there is some risk of curtailment. However, the cost of electricity is very cheap at these sites. And that's why you do see a lot of Bitcoin miners utilizing the state of Texas when it comes to basically finding those pockets of cheap electricity. Now, as I mentioned, it is a very low power rate site, and there is opportunity for some very high density mining. So, a lot of megawatts are being stacked up at these specific data centers. The third data center is Medicine Hat, and that's in Alberta, Canada. Now, that is one of Hut 8's longest standing data centers, and it has a very, very tenured team there. So they are very much familiar with how to operate these specific data centers, these Bitcoin mining sites. Now, one thing to note with American Bitcoin mining is they only have a total of 5 employees, two of which are full time. So they are not in the actual business of operating these data centers themselves. They are trusting the Hut 8 team to be able to really host them at this specific site and all of these data center sites. The fourth and final data center that's mentioned is their Vega site, and this is in the Texas Panhandle. Now, this one's very unique because it is positioned in the ERCOT territory, so there is quite a bit of renewables that have been tied into this specific region of power. So you will see a pretty good amount of solar power there, but that does come at some risks because the grid stability is not always the best whenever you're relying on renewables that cannot be run 24/7. But regardless, it is another robust site that has very low cost power for mining the Bitcoin. All right, and I want to go into a little bit of specifics on one of the miner purchases that was made recently for ABTC, and that is the Bitmain Antminer U321EXPH. Let's go through just some of the stats, and then we'll talk a little bit more about that purchase agreement. So the hash rate for these miners is 860 terahash per second. The power input is 11,180 watts. Efficiency is at a very low 13 joules per terahash. And the design, this is a hydro cooled, so it's liquid to chip cooled miner. And then as far as how to have them deployed, they are able to be put in a very dense fashion. at about 180 kilowatts per rack. So again, you can stack quite a bit of these up. And I do believe on the Hut 8's investor page, you can actually find some of these specific miners actually at work installed at one of these sites. So it's pretty interesting, pretty exciting. Specifically, these ASIC miners with the low efficiency, it means they are going to be able to mine at a pretty good margin. So looking into the actual purchase agreement, there is a total of 17,280 of these miners that they are purchasing through a third party. It's a subsidiary. It's called Gladstone's Zephyr. If I'm saying that wrong, correct me in the comments. I thought that was interesting. Instead of going directly through Bitmain, they're actually utilizing this third party to negotiate with Bitmain, and then they're paying them. Now, as far as how much they've already purchased 16,299 of these miners, and that represents a total hash rate of 14.02 exahash. So we already talked about their overall hash rate. This one purchase is over 50% of their overall hash rate. So that's pretty significant. And as you can see by the efficiency, they are an excellent fit to really help round out their portfolio. Now, total purchase price for the 16,299 was 314 million. The overall pledge purchase order through this subsidiary for all 17,280 of these miners was 320 million. So again, pretty interesting how they're utilizing this third party and then how they're making the payment. They're not paying through cash. American Bitcoin Mining does have a pretty good amount of Bitcoin on their balance sheet already, and they're pledging this Bitcoin. So they're going to be tying this up. So they have the optionality to either sell it and then pay cash for these specific miners, or at a later date, they can just pay cash for them and think of it as collateral. So they've locked up this Bitcoin through Bitmain. And again, we've seen some other Bitcoin mining companies do something similar where they'll basically hand over a specific amount of Bitcoin with the optionality to buy it back at a later date. So just want to point that out. But I do think that this was a very strong purchase for American Bitcoin mining. All right, and let's get into the merger information. They did disclose the percent ownership between the two companies after the merger, and American Bitcoin Company will take a total of 98% ownership, whereas Gryphon Digital Mining Company, those shareholders will have 2% stake in the company post merger. Now, all this information was disclosed in SEC filings. I did a quick Edgar search today, and there was a significant amount of documentation. One thing, if you are familiar with my channel, you know that I am not just reading through press releases. You are not going to get just a surface level overview of this information. I am digging in deep through these filings to make sure that I can get you as much information as possible. But moving on, wanted to point out a couple other interesting things about this merger. There was a new code of conduct document that was adopted as of September 3rd. So this is between, again, American Bitcoin Company and the Gryphon Mining Company. So I thought that was pretty interesting. And then also, it includes Hut 8. So those three kind of entities, those three companies all together, they do have a new code of conduct. And then another thing to mention is there's three different classes of shares and they have various voting rights. Class A's, one vote for one share. Class B's, you get 10,000 votes for each share. And then Class C, you get 10 votes per share. So again, they do have what you would consider a super vote status on these Class B shares. So just kind of want to point out that a little bit of information, but let's jump in a little bit more on the financials. All right, and the first section we're going to review is going to be the balance sheet information. Now, as I mentioned, this is pro forma, which means we are combining the two companies' financials. If you're curious as to each individual company, they do have the columns here on this specific filing, but I'm focusing on the far right. Let's take a look at the assets. First, you can see their cash and cash equivalents is sitting at $206,603,000. They do have a few prepaids, but moving on past that, digital assets are sitting on about 43 million. 322,000 of those digital assets. And then property and equipment, it's around 118,548,000. So those would be a lot of their ASIC miners. Because remember, they are utilizing Hut 8's data centers. They do not own those data centers. So the majority of their property is going to be actually tied up to their mining rigs. Now, looking at all of that, there was one other thing I think it's important to point out, and that's this goodwill amount that was added to the pro forma. Now, that could cause some issues down the road. We'll talk about that in the risk section, but for now, it has been added in as part of the asset line. So, comparing assets to liabilities, liabilities is only $81,608,000. So, a pretty robust asset to liability ratio here. Taking a look at the liabilities, it's sitting at $81,608,000, and it's broken up into both current liabilities and then some deferred taxes and operating lease liabilities. So short term and more of a midterm type of breakdown there, but overall 81 million. So a pretty robust asset compared to liability on their balance sheet. But now let's take a look at the income statements. All right, and jumping in, take a look at revenue first. Again, combined revenue is $45,558,000. And then breaking that down from a cost of revenue standpoint, it's $30,650,000 in cost. The majority of that is on ABTC for both revenue and cost of revenue. Now, moving on past that, one thing I want to talk about is their general and administrative expenses. Again, $18,008,000 does seem a little high for the small amount of employees that they do have there, but overall, $28,231,000 on their general and administrative. There is some stock-based compensation as well listed, but it is removed as part of the pro forma. So it does look like they've taken that out and cleaned up that portion of the books here. Now, past that is going to be their depreciation expenses. So as you should assume, depreciation would be pretty high on the ASIC miners. So overall depreciation pro forma is $17,981,000. So taking a look at the unrealized gain loss on digital assets, you can see that pre-merger, American Bitcoin Company had a pretty high amount of gains at $109,357,000. Now, moving over, you can see the pro forma combined is at just $11,115,000. So they actually cleaned up a significant amount of this, and that's because the Bitcoin did not all transfer over with this specific merger. Some of it was spent, or some of it was given to the uh, really the parent company here, which would be Hut 8. So it's been taken off of the books of American Bitcoin Mining Company. So good news for them. They don't have to worry about an FASB rule in case the price of Bitcoin does fluctuate on the downward side for this next quarter. Less risk there on their end on the income statement. Moving on past that, overall loss of operations is sitting at $44,873,000. Now, with them utilizing the HUD 8 sites along with these more efficient miners, I do feel that they will have a better opportunity to actually have a positive quarter. So we'll just have to wait and see just how much of that they're able to energize this specific quarter, and then what type of forward-looking statements and guidance will the company give us in the weeks and months to come. All right, and as I mentioned, there is an ATM currently active. Wanted to go over that right now. So you can see here the overall offering price of this ATM is $2,100,000,000. So it's a pretty significant amount of ATM. Now, if they're able to capitalize on this and the share price is in the favor of investors, so the dilutive impact has been minimized, this is going to be great news for investors and great news for the company because they're going to be able to take this funding and purchase additional miners and really scale their business and operations to set themselves up for quarter over quarter growth. So, again, ATMs don't have to be a negative thing. You just have to be able to utilize it appropriately, and the management team needs to prioritize scaling over incentive bonuses and things of that nature. So, again, it's going to be really important to see over the next couple of quarters just how much of this ATM is being used to scale operations. Now, outside of that, I just wanted to point out that it is an ATM. This second box down here says the Class A common stocks offered hereby are sold in the at the market offerings, and investors who buy shares at different times may pay different prices. So they are using quite a few different companies in order to make this transaction happen. So they do have quite a bit of big names behind this ATM, really to kind of help get the funding going. So I would be interested to see just how quickly this ATM is able to be closed. I guess we'll have to wait and see if we get updates on the overall usage of it in the weeks and months to come. All right, and the previous line was more on the offering price. Now I want to talk about the share count. So American Bitcoin Company does have a total amount of authorized shares of 1,100,000,000 shares, and these are for their Class A common stock. Now, during the 6 months prior to this merger, ending June 30th, 2025, ABTC did enter into a common stock purchase agreement with a private placement with certain accredited investors. Now, I talk about this because this is another way that they were able to raise some good capital. They agreed to sell and issue a total amount of shares that would give them proceeds in the amount of $200 million. And there was an up convert, or I guess they call it an oversubscription, for up to $250 million for this specific private placement. Now, overall, this private placement took place on June 27th, 2025, and ABTC did issue a total of 11,002,954 shares, and that did generate proceeds for $215,300,000. And again, that's after deducting different fees. Now, one other interesting aspect for this specific transaction was that $10 million worth of Class A shares were sold in order to get Bitcoin. Now, they purchased Bitcoin at a price of $104,000 per coin. And looking at today's prices, they're in the money on that purchase. So that was a good decision by management there at ABTC. All right, and now let's talk a little bit more about that ATM strategy. So again, this is a way to generate additional equity for the company. Now, here's some benefits for the ATM. It does provide flexible access to capital without waiting for large equity raises. So again, they can get this cash rather quickly within just a day or two from the sale of their shares versus having to wait for a contract to be written up by a private placement, as I just mentioned on the previous slide, or looking at even senior convertible notes. There's quite a few other avenues that a company can look into, but it's just not as quick as an ATM. Now, the second bullet point is that they can use this ATM in order to help finance their miner purchases. So, again, if there's a lucrative deal on the table for miner purchases, they can act quickly and get money on the table or Bitcoin on the table to make that happen. On top of that, they can also utilize this ATM in order to upgrade their facility. So if they want to put in maybe some additional immersion type equipment or some liquid to chip type of infrastructure to kind of help stack some of these newer miners, they have the ATM to kind of help pay for some of that. Now, another thing would be opportunistic acquisitions. So the company is utilizing four of Hut 8's data centers, but in the event that another data center would become available, they have the ATM and could utilize that in order to be able to purchase some additional power footprint. Now, the third item is really a little bit on the risk side of an ATM, and it's shareholder dilution. So, investors should watch closely how this ATM is being utilized and what the management team is using it for. Are they using it to scale up the business, or are they utilizing this in order to help pay for some of their payroll expenses and other types of compensation packages? So, again, really important as the company starting out. How are they going to utilize this ATM? And they have a really, really great opportunity, I think, to be able to do what they need to scale up and potentially hit 40 exahash in the months to come. And one last thing to talk about is this bottom section here. It says that paired with ABTC's minor put option, which is that purchase order agreement through Bitmain that I talked about on that previous slide, the overall 17,000 ASICs. They've purchased about 16,000 of those ASICs. This ATM acts as a growth lever to scale hash rate in sync with Bitcoin price moves. So, I already talked a little bit about that. So, of course, as the price of Bitcoin or global hash starts to increase, it's going to be critical for them to continue to scale their business without having to wait for long contracts to be drawn out and reviewed through legal. And another caveat when looking at the ATM and the private offering placements is what the impact to book value does. So, just went through some of the risks, some of the key caveats when reviewing the dilutive impacts. So, again, ABTC plans to sell an additional 304,347,826 shares, and they had the initial offering price set at $6.90. So that would help them raise about $2.1 billion. That would be huge for the company. Again, they could scale up business significantly with that type of offering. Now, after all of the expenses are paid and everything else, they're going to be raising about $2.329 billion. And that actually is a total value of just $1.92 per share. Again, because all the additional shares got added in, they would then need to divide the book value by the share count. So, again, that is the issue with additional shares being added to the common float. It does have this dilutive impact on the price. Now, there's a couple examples here. So, if existing shareholders were to utilize this NTBV and get this $2.329 billion added to their balance sheet, they are going to see a share price increase from 32 cents a share up to $1.92. So it's excellent for existing buyers. But anyone who's buying after the merger, once the ticker did go live on the NASDAQ, they are purchasing it at $6.90 per share. Of course, it depends on how the price action for the day is going. But with that, and knowing the book value is only at $1.92 per share, that means there's a dilutive impact, or you could think of it as a premium where you're paying above book value by $4.98. So, again, depending on the forward looking and future statements of the company, this premium could be accepted pretty well by the market. But if they don't have the right verbiage, the right wording and messaging out there, then there is risk of the price falling. So just keep that in mind if you're investing. That is one of the risks here whenever there's a lot of capital raising going on. Now, the final result in all this is an immediate dilution of $4.98 per share for new investors. So that is just based off of this $6.90 price purchase and comparing the book value as of today. So if the price of Bitcoin was to skyrocket, then all these numbers would need to be reassessed again. So just keep that in mind. Now, there is some additional future overhang as well. So a little bit of additional dilutive context that you should be aware of outside of this ATM, this offering we talked about, and that is some warrants. There is 1.37 million warrants, and these warrants can be converted at $1.50 a share. So that would have an impact on new shareholders. Again, current shareholders sitting at just 32 cents per share. This warrant exercise really isn't going to impact them. Now, the next section is restricted stock units, RSUs. This is for employees and execs. There's a total of 257,000 shares kind of earmarked for this specific thing. So again, that is another form of dilution if the execs, if the employees decide to sell their shares back into the free float versus keeping them locked up as restricted shares. Now, the last thing is that these Class C stocks, they are convertible into Class A stocks, and that's all part of this 2025 incentive plan. So again, the executives, the employees here that have these Class C stocks, if they are awarded them based off of that 2025 incentive plan, again, they could convert them to Class A, they could be sold back into the market, and it would have a dilutive impact. So just keep all of that in mind when you're investing. I am not saying you should or should not invest. Again, I'm not giving financial advice. I'm just trying to provide a little bit of education behind some of the metrics that you should be aware of when investing. And speaking of being aware, let's go over risks and then we're going to talk about some positive catalysts for the company. Again, I'm trying to make sure that I'm fielding both sides of this specific merger and these transactions. So, from a risk standpoint, there is hardware dependence. So, the company is relying heavily on Bitmain's supply chain. So, any delays, any significant tariff type of impacts or impositions from the executive branch here in the US could have some potential impacts on the Bitmain supply chain and the overall cost of these ASICs. So, just one risk to keep in mind. But this risk is really open to all Bitcoin miners or even some data centers that are using HPC AI that are utilizing foreign chips. Again, foreign chip manufacturers are also at risk for both a supply chain shock and also from a tariff imposed standpoint. Now, looking on past that, the data center specific risks. So, looking at some of those four data centers, Alpha, that hydropower, the hydroelectric, is a variable type of energy. It is not going to necessarily be consistent. So, if there's a lot of heavy rain going on, of course, the hydroelectricity is going to be at a better output than if there's any form of a drought going on. Now, outside of that, there's also some regulatory oversight. So, if that specific site there in New York was to see any type of issues by local or state governments in terms of how that specific site is being ran, if they kind of force them to curtail for whatever reason, then yes, that could have an impact on the company. Now, the other two sites here in the middle are Texas sites, and it's really part of that ERCOT. And this volatility from a day to day in terms of grid stability and in terms of the heat and overall energy usage that we've been seeing, it does sometimes play into significant uh, Bitcoin mining swings. We've seen this with Mara, how they've had very high days of mining and then very low days of mining. Again, the state of Texas, it is very cheap power, but if you have to curtail it, it could put you at a significant disadvantage. So, again, I think it's really interesting that American Bitcoin mining has four different sites and they're pretty good in terms of geographical diversity. Again, we have New York, we have Canada, and we have these two in Texas. And the last site we want to talk about in terms of risk is going to be that Medicine Hat one in Canada. And it's really about the Canadian regulatory concerns and then any cost risks if any additional tariffs, if there is anything imposed at all on HUT 8, who is the host, really the power provider in this relationship, then it could end up being a negative thing for American Bitcoin mining. So, a couple other risks. Of course, we already talked about the ATM dilution. We talked about how that equity raising could put pressure on the shareholder value. And then from a Bitcoin volatility standpoint, yes, we could have a really nice Bitcoin bull run with no pullbacks, but in the event that we have any slight pullbacks, even if it's just shorter term, there is some risks on share price because we have seen quite a bit of movement on share price for the Bitcoin mining sector, specifically how they proxy to Bitcoin. So again, there could be some pretty good price swings for ABTC moving forward. Now, the last one is that goodwill exposure. I talked a little bit about that, but could any third party accounting agency or even the SEC, could they come back and push back on that goodwill amount? That's possible, but as of right now, I don't think that's something that we necessarily need to worry about. But just know that that specific line item could be under some form of scrutiny in the future. All right, enough about doom and gloom. Let's talk about some of the positive things that could occur for the company, which would help increase that shareholder price tag. And that is going to be things such as the execution of this contract. So, if the company announces that they've purchased additional hash rate, especially very efficient miners, that's going to help them because that's going to give them a better annual run rate in terms of profit margin and revenue. Again, the next one is going to be the facility expansions and rack density upgrades. So, as the company continues to disclose operational updates, I think it's going to be very interesting if they're able to deploy a lot of these rigs at a very low cost, very cheap rate in terms of energy, then that's going to give them really nice margins, and that should help them justify really that additional premium that we're currently seeing on the share price. Now, the next thing is going to be Bitcoin price correlation. So, for every five to $10,000 move in the price of Bitcoin, it actually provides a pretty significant increase on the balance sheet and the income statement for this specific company because they are holding Bitcoin on their balance sheet. Now, the last thing is strategic partnerships. So, specifically talking about their ASIC partnerships. So, if they are to deepen their partnership with Bitmain, if they're able to get any other discounts or coupons through ASIC purchases, that could also help really give them a little bit of additional value as their asset versus liability will continue to grow on the asset side more than the liability. So just want to point that out as well. And then the other thing would be if Bitmain starts to expand more into the US, which would help de risk the tariff impact situation, in my opinion. So, those are some of the catalysts that investors should be looking forward to in the future weeks and months to come. All right. And lastly, I want to leave you with a quote by Hut 8 CEO Asher. He said, by combining Bitcoin mining, opportunistic market purchases, and the backing of Hut 8's energy and digital infrastructure, we have created a vehicle designed to drive rapid, efficient Bitcoin per share growth. So I think that's a very powerful statement. And that is attributed to the additional ASICs that they're stacking up for very high profit margins that is helping them generate additional Bitcoin at a much lower price than spot pricing in the market. So I think that's a very powerful statement. Glad I was able to catch that today from the CEO of Hut. All right, and that about wraps up for me. I hope you guys enjoyed this really in-depth look at American Bitcoin mining. If you did like the video, consider giving it a like, subscribe to my channel if you haven't already, and drop a comment. Let me know your thoughts about today's press releases, about today's space calls, and about these Edgar filings that we did review here. Love to get your feedback on that. And with all that said, hope you all have a great rest of your day. Keep calm, hash on, and I'll see you on the next one.